2024 was a wild ride for investors. We saw big swings in the market. Some assets soared while others stumbled. Geopolitical events and economic uncertainty fueled the volatility. Investors were constantly adjusting their strategies. It was a year of both risk and opportunity. The year started with lingering concerns from 2023. Inflation remained sticky. Interest rates were still high. The war in Ukraine continued. These factors created a cautious mood among investors. However, as the year progressed, there were glimmers of hope. Inflation started to cool. The Federal Reserve hinted at a pause in rate hikes. This sparked a rally in certain sectors, but just as quickly as optimism emerged, new challenges arose. Unexpected geopolitical events sent shockwaves through the markets. Supply chain disruptions persisted. The energy crisis deepened in some regions. These events served as a reminder of the interconnectedness of the global economy. Investors had to navigate a complex landscape with shifting risks and rewards. As we delve into the performance of different asset classes, remember that 2024 was a year of extremes. There were big winners and big losers. Understanding the forces that shape the markets is crucial for making informed investment decisions in the years ahead. To understand the investment landscape, we need to look at the big four asset classes: cryptocurrencies, commodities, equities, and currencies. Each of these plays a unique role in a diversified portfolio, and each one reacted differently to the events of 2024. Cryptocurrencies, known for their volatility, experienced a resurgence in 2024. Bitcoin, the flagship cryptocurrency, made a significant comeback after a bear market in 2023. Ethereum, the second largest cryptocurrency, also saw impressive gains. This resurgence was driven by several factors, including increased institutional adoption and growing interest in decentralized finance. Commodities, which include everything from oil and gold to wheat and copper, presented a mixed bag. The performance of individual commodities was heavily influenced by supply and demand dynamics. Geopolitical events and weather patterns played major roles in shaping price trends. For example, the ongoing war in Ukraine had a significant impact on energy prices. Equities or stocks generally performed well in 2024. Major stock indices such as the S&P 500 and the Nasdaq Composite reached new all-time highs. This strong performance was driven by factors such as corporate earnings growth and continued low interest rates. However, not all sectors performed equally well. Technology stocks in particular outperformed other sectors. Currencies were also volatile in 2024. The US dollar, typically seen as a safe haven currency, weakened against some major currencies. This was due in part to concerns about the US economy and the Federal Reserve's monetary policy. Other currencies, such as the euro and the Japanese yen, also experienced fluctuations. In the following sections, we'll take a closer look at the performance of specific assets within each of these categories. Let's talk about the rock stars of 2024, Bitcoin and Ethereum. These cryptocurrencies took the market by storm, leaving many traditional assets in the dust. What fueled their remarkable rise? Bitcoin, often called digital gold, saw its price skyrocket. Investors, worried about inflation and geopolitical instability, flocked to Bitcoin as a hedge. They saw it as a safe haven asset, similar to gold. Big institutions also jumped on board, adding Bitcoin to their portfolios. This boosted Bitcoin's credibility and drove up demand. Ethereum, known for its smart contract capabilities, wasn't far behind. The continued growth of decentralized finance, DeFi, and non-fungible tokens, NFTs, fueled Ethereum's rise. More and more developers built on the Ethereum blockchain, expanding its ecosystem and attracting investors. But it wasn't just about speculation. The underlying technology of Bitcoin and Ethereum gained wider acceptance. Companies started accepting Bitcoin as payment. Governments explored using blockchain for various applications. This growing adoption solidified their place in the financial system. However, remember, cryptocurrencies are still highly volatile. Their prices can swing wildly in short periods. While 2024 was a banner year, investors should be prepared for potential ups and downs in the future. Always do your homework and invest responsibly. When uncertainty looms, investors often turn to traditional safe havens like gold. And in 2024, gold did not disappoint. It glittered as a hedge against inflation and geopolitical risks. Meanwhile, major stock indices continued their upward climb, driven by strong corporate earnings. Gold prices remained relatively stable throughout the year, offering a sense of security amidst market fluctuations. Investors concerned about rising inflation viewed gold as a store of value. Additionally, geopolitical tensions such as the ongoing conflict in Eastern Europe further increased gold's appeal as a safe haven asset. Major stock indices, including the S&P 500 and the Nasdaq Composite, continued their bull run from previous years. Despite economic uncertainties, corporate earnings remained robust, particularly in the technology sector. Low interest rates also contributed to the stock market's positive performance. The tech-heavy Nasdaq Composite, in particular, outshone other indices, driven by the continued growth of mega-cap tech companies. These companies benefited from increased digitalization and the ongoing shift towards cloud computing and artificial intelligence. While gold provided stability and stock indices offered growth potential, it's important to remember that past performance is not indicative of future results. Investors should carefully consider their risk tolerance and investment goals before making any decisions. Section 5. A mixed bag. Global stock markets and industrial metals. Moving beyond the US, global stock markets presented a mixed bag in 2024. Some regions thrived, while others faced headwinds. Industrial metals essential for construction and manufacturing also experienced fluctuating fortunes. The European stock markets, represented by indices like the FTSE 100 and the DAX, showed resilience despite ongoing geopolitical concerns and energy challenges. However, growth remained modest compared to the US market. The UK's FTSE 100, heavily weighted towards energy and financial companies, experienced volatility due to fluctuating oil prices and interest rate hikes. Asian markets, including the Nikkei 225 in Japan and the Hang Seng Index in Hong Kong, faced a challenging year. China's economic slowdown, coupled with geopolitical tensions in the region, weighed on investor sentiment. The Hang Seng Index, heavily influenced by Chinese tech giants, experienced significant volatility. Industrial metals such as copper and aluminum experienced fluctuating prices throughout the year. Supply chain disruptions, geopolitical events, and fluctuating demand from key industries like construction and manufacturing contributed to this volatility. Copper, often seen as a bellwether for global economic health, experienced periods of both gains and losses. The performance of global stock markets and industrial metals highlights the interconnectedness of the global economy. Investors need to stay informed about global events and their potential impact on different asset classes. Section 6. Laggards of the market, underperforming currencies and commodities. While some assets thrived in 2024, others lagged behind. Certain currencies and commodities faced headwinds, resulting in lackluster performance. Understanding the factors behind their struggles is crucial for investors. Some emerging market currencies, particularly those heavily reliant on commodity exports, faced depreciation pressure. Factors such as geopolitical instability, weak economic growth, and rising interest rates in developed economies contributed to their decline. Investors sought safer havens, leading to capital flight from these currencies. Certain agricultural commodities like wheat and corn experienced price declines. Favorable weather conditions in key growing regions led to increased supply, putting downward pressure on prices. However, it's important to note that agricultural commodity prices can be volatile and subject to sudden changes due to factors like weather events and geopolitical developments. The underperformance of these currencies and commodities serves as a reminder that not all assets move in sync. Factors such as global economic growth, geopolitical events, and supply and demand dynamics can significantly impact specific sectors and asset classes. Section 7. Making sense of the trends. Key takeaways from 2024. 2024 was a year of stark contrasts. We saw some assets skyrocket while others stumbled. What can we learn from these trends? Here are some key takeaways for investors. Inflation and interest rates matter. Inflation remained a concern, influencing central bank policies. Rising interest rates impacted borrowing costs and influenced investment decisions. Geopolitics rule. The ongoing war in Ukraine and other geopolitical tensions created market volatility. Investors sought safe havens like gold during times of uncertainty. Tech still reigns. Technology stocks continued to outperform, driven by strong earnings and innovation. The rise of artificial intelligence and cloud computing fueled growth. Crypto gains ground. Bitcoin and Ethereum surged, driven by institutional adoption and growing interest in blockchain technology. However, their volatility remains a concern. Diversification is key. Don't put all your eggs in one basket. Spreading investments across different asset classes can help mitigate risk. Section 8. Looking ahead. Navigating the investment landscape in 2025 and beyond. As we look ahead to 2025, the investment landscape remains complex. Several factors will shape market trends, and investors need to stay informed and adapt their strategies accordingly. Economic outlook. Global economic growth will influence market sentiment. Factors to watch include inflation, interest rates and potential recessions, geopolitical risks. Tensions between superpowers, regional conflicts and political instability can create market volatility. Investors should stay informed about geopolitical developments, technological advancements. Innovation in fields like artificial intelligence, renewable energy and biotechnology will create investment opportunities. Regulatory landscape. Changes in regulations, particularly in areas like cryptocurrency and data privacy, can impact specific sectors. Navigating this evolving landscape requires careful consideration. Investors should focus on long-term goals, diversify their portfolios, and stay informed about market trends. Seeking advice from financial professionals can also be beneficial. Section 9. The final word: balancing risk and reward in a dynamic market. The financial markets are constantly evolving. 2024 reminded us that volatility is the name of the game. But within that volatility lies opportunity. By understanding the forces at play, investors can make informed decisions. Remember, there's no one-size-fits-all approach. Your risk tolerance, investment timeline, and financial goals should guide your decisions. Whether you're a seasoned investor or just starting, staying informed and seeking expert advice can make all the difference. The key takeaway: stay curious, stay informed, and never stop learning. The world of finance is constantly changing, and so should your investment strategy. By embracing knowledge and adapting to new trends, you can navigate the markets with confidence.